Hey, what's going on, everybody? Froggy Stonks here. Nothing I say is financial advice, entertainment purposes only. This is a Twitter space call from earlier today talking about synthetic stealth dilution that the market makers and everybody is doing. Here it goes.
I got a few good things you guys are going to want to hear. It's going to be pretty amazing. Trying to get the live stream up too. There's so many things about APE that people just have not. It's not clicked in their head yet. It's coming. It's going to be phenomenal. Let's wait for a few more people, please. If you just joined, please tweet out the call. It's not going to be a super long call. We're just going to go over the structure of APE, how it's going to land on the market, what it's going to do to the short sellers of AMC, and how it could specifically give us a reconciled share count when they start selling. Got the 8K pulled up. Could not access the channel. It's giving me issues on live stream. Well, I'll just record it. All right, now the room's filling up. Here we go. We got AMC shares out there that were failed to deliver, naked shorted for over years. So we have the 2 billion share theory, right? We think there's 2 billion AMC shares out there. The awesome thing about it is if they were naked short or failed to deliver on AMC as the dividend date, then they were also automatically failed to deliver in naked short on APE too, which means they have to go buy APE to facilitate this position. But where do they get it from? They have to wait for us to sell. That's why I think Monday, or whatever day it was that APE sale was announced, which was, Monday, we saw that pre-market drop as soon as they dropped the 8K and the prospectus, because a lot of retail people around 8:30 in the morning, which, yes, we are up then, a lot of people got scared, and I think they started selling. And then all of a sudden, we had that big green candle. That's because institutions came in and bought that APE up and started to clear some of their naked short positions. When you naked short a stock, normally when you short a stock, you have to buy it first or borrow it first, and then you short it, which means there's a balanced buy pressure with sale pressure. It's a little one-sided for the shorts because they also have to pay interest. But when you naked short a stock, that buy pressure never exists. That means there's 100% pure sell pressure on the entire float of the stock in the open market. But it's hidden dilution. I call it stealth dilution. When you naked short, you're not going to show an increase in market and shares outstanding or free float. It's just going to be dilution on the share price, and then there's a failure to deliver. Failure to delivers out in the open market are, in fact, them selling shares they don't own. That means that increases the float. That increases the dilution on the stock. Naked shorting stealth dilutes the shares outstanding in AMC and APE. So Adam Aaron caught him red-handed. We all know it's happening. He can't talk about it, not directly in any way, because then the entire market would come out with lawsuits against him, burying him for years. So what he did was he issued APE as a dividend and a preferred stock, which you really don't want to short preferred stocks, because if there is bankruptcy, preferreds get taken care of before common do. So it's like a protection. The problem is all the naked shorts they had on AMC, they're now naked short APE too. There's shares out there that don't exist that they need to. We saw the 45 million FTDs. I think that was just from buying pressure on day one. The interesting thing about the APE sale, when institutions go to Citigroup and say, we would like to buy 10 million shares of APE, right? They have to do all of this in writing. It's all going to be controlled. It's a bona fide offer for 10 million shares of APE. There's 425 million available, blah, blah, blah. It's same-day settlement. So everything's going to be controlled, coded, written, all of that. It's all going to be right there in black and white. The best thing about it is we know more than likely if the billion share theory is real, there's more than 425 million APE that's currently needed out there in the market. That's why they put in the 8K, the lines about purchased APE units and solely for the purpose of covering over allotments is to grant Citigroup Markets Inc. the option to purchase the additional securities specified. So they've already got it in writing that Citigroup can come to AMC and buy more than the 425 million if there's over allotments. They're already prepared for it. The beautiful thing about this is you're giving an opportunity for naked shorts to fulfill their positions. When they do, that is going to create the buying pressure that was never there in the first place. You're now balancing that naked short with buying pressure, which is going to give you some incredible price action. The funny thing is, when you naked short, you set yourself up for failure. Adam Aaron is now selling more APE shares on the open market. People are going to come in and start to buy those APE shares, which fulfills, whether the naked shorts buy it or not, it fulfills that buying pressure requirement, which is going to make their naked short devalue greatly. As APE starts going up, when these people start to cover their naked shorts, they now come into a real short position, which if you're short this thing for real and you see APE price going up, you want to close. In theory, this APE equity offering is going to trigger, if there's going to be a squeeze, it's going to trigger the squeeze when these individuals who naked shorted AMC now have to come back and buy APE to facilitate the delivery of APE to the FTDs or the naked shorts they created, which means it's going to be a pattern of circular buying pressure. At the same time, they're fulfilling their naked shorts, you get the buying pressure and the price is going to go up, which devalues their short position, making them want to close. So whatever is coming up is going to happen with this. This is it. This is going to be what ends this entire, not end the play, but what's going to trigger the end game for this play going into 2023, where they know new revenues are coming in and it's going to look really good. I hope everybody understood what I just said. It takes a minute to process, but just think of it this way. If I sold you a share that I didn't own, and then suddenly I owed you a dividend because the company issued it on the back of the share I sold I didn't own, I've got to go buy that, lest I get busted holding naked short positions, which is going to end up happening when they sell this APE. When they come out and buy all this APE up, it's going to show how much over they went on APE. 425 million shares is 82% of the entire APE float. So when they come out and say, oh, well, we need another 100 million shares, Citigroup will sell that in the over allotment agreement. And then Adam Aaron's going to come out and go, how come you need more shares than 425 million? You guys only own 10% of the APE float. Retail owns 80% or 90%. So why do you need all these extra shares for? It's going to be freaking crazy. So what's up, Omni, man?
Very well said. Very well said, man. Keep going. What's up, boss?
I'm just trying to get people to realize the meat and potatoes of all this is that when Citigroup starts getting requests for APE that exceed the amount of covering they need to do, then Adam Aaron's going to go, why do you guys need so many APE? Because when they were short AMC, they were automatically short APE. And if they had naked shorts, they had to fulfill those. But they can't because we won't sell them any shares. That's why I kept telling everybody, when people decide to finally give up and sell, you'll see a massive price increase on the stock. Because basically what you're doing is you're reducing the stealth selling pressure dilution when we sell a share back to the market makers, because they're clearing that naked short off their books. That's what happened Monday, in my opinion.
Is there a date that they have to clear their books by, or they just can keep rolling it until they get caught, criminally?
Here's the thing. If they keep rolling it, they're consistently paying more and more and more because, one, they have to maintain a true short position first. So they're paying that borrow fee nonstop. But two, when the rest of the market's going down, their longs are getting put underwater. We know none of the funds are doing good. None of the market makers are doing good. How long do you kick that down the road before you go, oh, I blew up my fund and I'm closing down and now I'm under investigation? So this is Adam Aaron giving them a chance to get out of the play without absolutely ripping their throats out, but at the same time, it still could. they have to buy APE to facilitate what they owe to the market, to retail, which is going to cause that reverse. It's going to remove that stealth dilution off of the stock. So we'll have that price action first. Then they're going to be in a legal short position, watching the price go up while their shorts go down, which is going to cause them to want to cover and get out of the play. If they do not get out of the play before the end of the year, they're going to crush the entire market with this. So,
And you don't think they're on the, burn it all down ideology yet?
oh, I absolutely think they would try to burn it all down. But the problem is, once this APE sale happens, if they start buying these shares and they start covering their positions, Adam Aaron is going to have now a reconciled share count showing that there's more APE out there than that should not exist. When people need more shares, when they have to buy more shares, so you have naked shorts of APE out there that don't exist, right? You have FTDs of APE that have nothing behind them. Their failure to deliver. They sold a share that does not exist. When those new shares enter the market and we start seeing closeout, we're going to see significant price action, but you're also going to get a reconciled share count on paper through Citigroup. They're going to say, I need 20 million shares. And after it's all said and done, Adam Aaron's going to come out and they're going to see, how are there 43 million FTDs? How are there this many short positions? What's going on? All the numbers are going to be there. And that's going to correlate between AMC too. Once you figure out what's going on with APE from the share offering, they're going to be able to correlate that directly to AMC because it was a 1-to-1.
Sounds all interesting. Let's see how it plays out. I mean, they keep dropping the price, and I can't fathom the fact that people are still buying and they're just allowing that to go on. I mean, it does show up that they stopped letting people in Europe buy. That says something, but here, the fact that people are still able to buy it every day and cheaper prices, that just blows my mind.
They're just shoving it all in the dark pools, man. I'm telling you, FTDs are going to spike back up again for September. There's no way you can drop the price this much. When they said they cleared, say 35 million FTDs, you don't clear 35 million FTDs with negative price improvement. There's no way. So we keep seeing APE go down and more people are buying, and they supposedly cleared 40 million FTDs. On Monday, when APE launched on August 22nd, we saw a 1.7% price increase per minute for the first 30 minutes. And that was with the 13 halts, or at least 7 of them. That's when the 43 million shares were basically failed to deliver. So you're just creating all that negative buying pressure. And at the same time, they were increasing short interest on APE. I think they had it up to almost 30%. So they crushed it to remove that buying pressure and all that FOMO from the markets. But the problem is now they're bag holding this massive position of uncertified APE, and they owe 43 million to somebody. So for them to fulfill those FTDs, they would have to go out and buy it from somewhere.
But while this is all going on, people are still buying AMC. I don't see how they get out of this. I really don't. Even him giving them a way out, it doesn't make any sense to me. I mean, there are people who are buying more, and they still have in their mind some number. And the number isn't like 30, 40, or 50 bucks. But now some of these people start at 1,000. They're like 10,000, 20,000 shares. It just, I mean, how does this? It seems ridiculous.
It's fucking crazy what they have. This will be a case study at the big colleges for a redefinition of moral hazard. They will redefine moral hazard by what's going on here with this play. These market makers have sold so many shares, and not just of AMC, of multiple companies. They have sold so many shares of stock that don't fucking exist out of these companies that they've crushed trillions out of the US markets. I mean, even the treasuries have massive FTDs, more than I think since 2008. And our economy's not getting better. The global economy is a disaster. You got Russia, and now we got hurricanes down in Florida. So we're going to have refinery issues in the Gulf. So this is going to be a pretty incredible thing that happens. And the funny thing is Adam Aaron has done it in the most legal way he possibly could. He has every right in the world to sell APE, And the funny thing is I think in a way he was waiting to see if retail was really leaving or not. And I don't think we did. We're all still here. He goes, okay, we'll do the APE dividend. It's a 1-to-1. We saw the issues with that. Everybody in Germany didn't get their shares till like 8 days later. They're not even selling the damn stock in Germany because they can't have that extra buying pressure. They took the buy button away from Europe. They failed to deliver on 43 million shares the first day on the open market. And it took 7 days for people to get their fucking APE. And they did that. The brokers did that because they needed 7 days to try to hand APE out, get people to sell it, and then redistribute it to fulfill those positions. The market makers and the brokers are in deep shit. And I'm telling you, it probably has something to do with why the SEC just fined all these dudes $1.5 billion for not keeping communications. All this is coming together in such a crazy way.
$1.5 billion though? Come on. That's ridiculous.
That's just for their communication issue, dude. They didn't maintain communications. They're slowly creeping in on these guys. The biggest thing is when APE starts going out the door from this offering through Citigroup in written agreements in block sales, you're going to see you're going to see very good price action on APE because as they buy those shares and either close those FTDs with legitimate shares or make their naked short positions legitimate short positions, you're going to erase a good 45 to 50% of the selling pressure, that stealth selling pressure dilution I was talking about off the market. And you're going to see price increase. And then Adam Aaron is going to come out with another $2.5 billion or more. He could say if Citadel came in and said, we need 100 million shares, they could be like, yeah, we're going to sell those to you at $7 a share because they can. They do not have to sell them at the current market price if they're doing a bona fide offer, which is highlighted in that 8K. They could ask for premium prices on APE, which I believe is anywhere between 5 and 10. So say Adam Aaron raises $2.5 billion off this offering, he's getting the money, he's getting a reconciled share count to see how many shares of APE were really out there. He's also giving an opportunity for shorts to correct their positions into legal positions and decide if they want to close and get out. So it's all coming. I don't know when they're going to start selling these shares. I assume there's already deals being brokered currently, and we'll start hearing about them maybe next week. I'm pretty sure.
You think that's soon?
I think so. Yeah. I'm pretty sure we're going to see Adam Aaron do a pretty positive tweet coming up for his birthday, but you don't want to go into a new fiscal year, like the government's new fiscal year, because all the banks are technically part of the government. You don't want to go into a new fiscal year with all this debt on your book, which is October 1st.
Well, sounds like you got it all mapped out. I mean, I give you a lot of credit, man. You know your stuff.
I've been thinking about it all week. We fought through all the stupid drama FUD this weekend. We just had a bunch of YouTubers, just not saying they sold their shares, but we had 4 or 5 of the biggest YouTubers just go, yeah, we're out of here. We're done making videos and this and that. And good luck to them, whatever the fuck they're doing. I don't care. But for them to peel off, we got Adam Aaron's birthday on the 30th, the new fiscal year on October 1st. All these major YouTubers are suddenly just peeling off out of nowhere, almost like they were kind of told to, in my opinion. Like, I believe maybe they want to shut this whole thing down. So they're saying, hey, quit hyping the play. We're giving them an opportunity to close this out. Let's let it settle, get it done, and move on. But again, also, too, you just had the Vatican, you had the Pope recall all of their assets back to the IRO, the Vatican Bank, on September 30th as well. So you don't want to mess around with new fiscal years.
I don't know, man. It sounds like it's all coming to a crescendo, but for some reason, I would like to see HYMC. That's really the one that I feel like got suppressed just because it tagged along, and the price on that one I've been building up. I mean, APE and AMC I'm good on. I feel comfortable. I got my computer share, I got my E-Trade. But HYMC, I just feel like, I really feel like that's just like a solid company that's going to come out of nowhere.
Yeah, 2023 is going to be huge for Hycroft. I'm not even worried about it. The data they put out on the mine looks amazing. I mean, they literally showed you right where the gold is. They have the cash on hand, and the biggest thing is, you know, they have $100 million on hand or more still. They don't have a whole lot of debt, but they have all their assets, man. They're not an exploratory, just starting out mining company. They've got their trucks, their mills, their miners, their equipment, their lab setup, the POX processor, the leach pads. They are a full up company with all their
dozens of
assets on hand and their infrastructure in place.
options investing
so when
strategies.
they start mining in 2023 and pulling that gold out and running it through the POX processing, you're now going to have leach pads producing what they've been doing per quarter, but you're also going to have almost double the production on the POX processing. So when they come out in Q2 of 2023 and say, oh yeah, by the way, we just mined like $35 million worth of gold, that's going to be huge. That's going to be such a revenue increase for them, you know, at still pretty premium prices. It's just stupid that I can't believe the stock is down that low. You got to think with the float size that they have, right? The Hycroft float, the amount of short interest that was on it at some point in time before all this happened, Hycroft had like 130% short interest. They were like maxed out. I think what happened is a bunch of people piled into the play, and then the shorts on Hycroft stopped reporting their short positions. You don't have to report those. So they've increased their short positions and they've increased what they're doing. Hycroft does have a cash burn, but it's going into infrastructure and expedited events to get back into mining. So,
okay. So let me ask you this: you have a good understanding of it. At what point, like the shorts just seem like kamikaze pilots at this point? They're just shorting shit that seems like almost pretty much 99% a surefire company. Explain to me the point of a short at some point.
Here's the problem. Before we came on the scene, shorts were untouchable. Short sellers were coming in, destroying companies, and nobody could say anything about it. Nobody could do anything about it, and they just got away with it. Radio Shack, Blockbuster, Toys R Us, and AMC was next on the chopping block, you know, next to GameStop. When they caught the naked shorts in GameStop, that alone destroyed their entire game. GameStop alone could have absolutely blown out the whole market. But then when we found out AMC was happening too, BBIG, Hycroft Mine, anyone you can think of, you had retail pile in with trillions of dollars trapping those shorts in those naked short positions. They were shorting AMC down at $1.90. If they would have started covering, you would have saw AMC climb back to $5-10. What happened is all the retail investors piled in on AMC from $1.90 to $5. That's what caught them and triggered that price run to $21, where they literally had to waive the collateral requirement for Robinhood. They're stuck. There is no way for these naked short sellers who are trying to destroy these companies to get out of this now. There's no way. And the whole theory behind it is too, that's why they're investigating Amazon, Google, Microsoft. These major big brand companies like Amazon are held long by market makers like Citadel, right? So Citadel comes out and says, we'll naked short these competition companies to Amazon to death, like Toys R Us, like Radio Shack, like Blockbuster. Amazon keeps growing in market share, and these other little retail companies get destroyed. Well, that's why they did it to AMC and GameStop. AMC theaters got crushed. Congress didn't even think about protecting companies like that, which is bullshit. And then Amazon comes out talking about buying out AMC at the lowest point in the price target. Meanwhile, they're buying MGM Studios. Amazon planned on buying a movie studio and then buying the theater out so that they could own the entire market share, and they got fucking caught. And that's why I believe also you see the news about Amazon, Microsoft, JP Morgan under investigation for their short selling practices, because we all know that Bill Gates has a $500 million short on fucking Tesla, which is now probably negative 1.5 to 2 billion for him. it's crazy, man.
No, it is.
But
It's wild.
If they're naked short AMC, if they were short AMC, naked short AMC, or failed to deliver on AMC during the dividend of APE, then all three of those were also contributed to APE after the dividend. So if you had, say, 500 million shares of naked shorting going on AMC that you're not reporting, you now have 500 million shares naked on APE. So your best option is to try to crush APE, right? So Adam Aaron comes out and does a share offering to put more buying pressure into the market. When the share offering comes out, it'll be pure buying pressure for the first couple days, right? When you naked short a company, you create that stealth dilution on the price. It doesn't show up in the float, but it shows up on the price. So the best thing to combat that with is buying pressure. This also gives those naked shorts an opportunity to try to clear their books and get out of that position. So it's going to be a big deal. We're going to see APE. We're going to see an APE increase in price when they start selling these shares. And then as Adam Aaron collects that cash, you're going to see an increase on AMC as he pays off the debt.
I wonder if after this happens, other companies will try to do the same thing.
I mean, GameStop did their dividend that, the market's destroyed that by doing it wrong, which I believe they're probably still fighting. Then you have BBIG with the Cryptide. I think Adam Aaron waited and saw what everybody else was doing. And then specifically, this probably came off the back of the STO idea, the T0 STO idea, but he did it in a different way. He did it in what I would call a more analog way. Instead of doing it with a security token, he did it with a 1-to-1 preferred unit that's same day settlement. So,
well, let's see how this ties out. You think on the 30th he's going to put out a tweet for his birthday, huh?
I think the 30th is going to be a big day, not because it's his birthday, but because the new fiscal year is October 1st. So a lot of government agencies have to redo their budgets, and a lot of banks have to comply with that type of stuff. So you're going to look at margin calls coming in October for a lot of financial institutions that are claiming they have all this money on their books when they don't. So I think he dropped the 8K and the prospectus this week because he saw the community getting really, really frustrated. So I think he heard us and they said, go ahead and drop it. Let's let them know what's going on. And now everybody has a better idea. But if you really, really read into the prospectus in the 8K, they cover the sales of over allotments, which means there's more shares out there than are going to, I think the entire 425 million is going to get bought up really quick. I think you're going to see massive buying pressure hit APE. You're going to see retail. APE going to $10 by itself is not even a question. Like, we've already seen it once on the first day. So it's possible. So think of this. You got 425 million APE getting ready to be sold into the market. That's going to balance out a lot of FTDs and naked shorts, which contributes to that stealth selling pressure, that stealth dilution.
Yep, time to load the boat again. Just keep buying.
That's all, dude. I've loaded up. I'm completely maxed out on my AMC and APE positions. I'm just sitting and waiting now, and I have a feeling everybody's going to be really happy at the end of this.
Yeah, well, we'll see. I mean, we'll be happy. I don't know if the hedge funds will be happy. I have no idea.
Dude, they're probably going to be thrilled just to have the opportunity to get out of this thing. They're not only are they losing billions, their reputations are getting absolutely destroyed. So
I don't think they care about their reputations. Look at Kramer. That guy's still out there.
Oh, it's important, man. You start getting people withdrawing their money out of your fund because you're wrapped up in a street fight with a bunch of apes that are out there making it trend. That's bad. So anyways, if anybody has any questions for a little bit, just come up and do it. I'm not going to keep the call open. I just wanted to drop what I thought was going on. And the key takeaway points in this is that when they naked short, they create stealth dilution. You can't see the dilution in the float. You can only see it in the price. When you sell more shares into the market, you balance that naked short selling pressure with more new buying pressure, which causes the price to increase. That's why we saw a January 27th and a June 6th run up.
What up, Spence?
What's up, Lucas? How you doing, man?
Not too bad, man. How you doing?
I'm great, man. I'm just sitting and waiting.
Yep, sitting back, chilling. Hey, I actually just had a question about Highcroft because I'm holding about 5,000 shares myself, and then my girlfriend's around the same. But are you at all concerned with any like short-term listing requirements for their stock? Or I mean, because I'm not really worried about them long term because I know that long term they have one of the best gold mines in North America. But I just short term, I'm looking at it like, what do they have to do to maintain listing requirements as per the exchange?
So you got to be above $1 for so many days, or to get delisted, you got to be below $1 for so many days, right? So just watch the number of days. I have a feeling Adam Aaron is going to come out and buy more Highcroft mine before that happens, shoving that price back up over $1.
I was kind of more or less thinking the same thing. Like, you know, I don't usually like to give into FUD or anything like that. But I mean, I was, you see all this stuff like, oh, they're gonna reverse split and do all this BS, and I don't think Highcroft is really in any position to touch their stock at this moment. So I think, like you said, I think we're either gonna have Adam Aaron either come out and make another investment, or some other big metals name, metals fund I think is going to come in here and scoop it up, because I mean it's literally pennies on the dollar is what it was at.
Diane Garrett's been talking a lot about going to these expos and summits saying, hey, we're looking and talking to new institutional investors. So if she's lining up new institutional investors in their operation, then she could have, say she found in the past 6 months 5 investors who were said, yeah, we're willing to buy 10 million shares each, right? She's going to put all of that together at one point in time and come out with a statement going, we're going to re-release another 50, or we're going to release another 50 million shares from the treasury. Remember when they approved all those billions of shares? Like in the past that just sit in the treasury?
Yeah.
At any time, she can go in there and go, we've got 5 institutional investors who have agreed to come on board at a price of $1.10. We're going to pull 50 million shares or 100 million shares out of the treasury. We're going to sell those shares to these new institutional investors, and another 20 million to the open market. So they raise another, I don't know, say another 50 to 100 million dollars, say $50 million. But the idea that you want to do it, and I'm sure they're watching the stock, and I'm sure they're watching the delisting requirements like a hawk. They would want to do this and announce the sale, or AMC announced that they're buying another 25 million shares at a discount, which would be great for AMC because they would average down. They announced that right before the stock delists. They fly back over $1, and then they're in the, they're healthy on their listing again for another X many amount of weeks or days or months. So,
yeah, the strategy behind that seems pretty clear. And I mean, if they were to do that, I mean, that would just throw shorts under the train tracks at that point. But yeah, no, it's interesting. I really hope to see that they can do that, because I mean, ever since I think you first introduced the idea of real dilution with real shares hitting the market actually being good. I mean, I've had that thought since December of last year, when we were seeing the price of AMC go from 72 all the way back down to 20, and then in December I really started thinking about all that dilution FUD last May and June, or last stockholder meeting last year, like all that FUD being pushed to not get us to vote yes to let Adam Aaron sell more shares into the market. I mean, it just makes a lot more sense now, because everything you said with the naked share dilution on the outstanding shares and the total float, I mean, you wonder why supply and demand won't work in this market, because we've bought in so many shares as a collective of apes out there that it doesn't even matter how much we buy because they're synthetically shorting. I'd say probably 10 to 50x what even our original daily volume is.
Well,
So
here's the thesis behind this. If retail keeps buying and buying and buying, and we buy out past the float, that means market makers and brokers are selling us shares that don't exist. And if they're doing that, you're now diluting the price because you're buying shares that don't exist. It would be like Adam Aaron, say there was no naked shorting and Adam Aaron sold another 500 million shares, that would cut your price in half. Well, what's happening is these institutions are selling us shares that were never legally issued by AMC. So they're diluting our price by us continually buying. That's, Lou said this a long time ago, but the way he did it was stupid. He said, quit buying AMC. You're diluting your own stock, right? That's not exactly 100% correct. You want to continue to buy because now you're averaging down. You're digging a deeper hole. These market makers that are selling us these shares are digging a deeper and deeper hole. And I'm actually kind of glad that we didn't dilute AMC or sell more shares of AMC in the past, because now with APE, we have a mechanism for reconciled share count, proof and synthetics, and the ability to convert at any point in time. So it's actually a better process than if Adam Aaron would have just sold more AMC into the market, because he would have sold more AMC, our price would have ran, people would have sold and left the play, and or they would have increased shorts after Adam Aaron sold more shares. So with this, they're now trapped because there's a 1-to-1 comparison between APE and AMC.
And it makes a lot of sense why all that FUD is pushed about being scared of dilution, and naked shorting is essentially dilution, right? You're not backing up a real supply and demand model with naked shorting. So the end all be all is when they're not allowed to naked short anymore, at least these stocks, or their margin requirements get pushed so far under, like you said earlier in the call, with all their other investments in the market basically biting the dust. It's only a matter of time. And for anybody who's a new ape and maybe has gotten in this year, you don't really know what has been going on. I mean, dilution on a real level where the company is selling shares to raise money, that is bullish for the company. Regardless of anything you hear, the company making money selling shares is bullish. Naked shorting is synthetic dilution, and that is what you have to be scared about. There's no reason to be worried about Adam Aaron going out there and possibly selling up to 500 million apes, because if you're in this play, you probably already believe there's 4x that of the float in synthetic shorts. So I mean, it should be very, very calming for most people. And I know a lot of people out there are angry, they're negative, they're in the red, but if this is going to teach anybody one thing, it's going to be how to hold stocks long term, which is what we've been preached to by institutions for the longest time until we started doing it. So it's, if anything, this whole play, being here since last January, this has really just taught me you can hold stocks and you don't have to really worry about the day-to-day red and green. You can have a goal, you can have an objective for your investment, and you see it through.
Hey,
Yes. Go ahead, man.
Hey, Spence, y'all hear me there?
Yep, go ahead.
I want to say something about this, what he just mentioned. I think it was Lucas that was talking. He was mentioning about holding stocks long term. When we originally got into this, and I want to shout out to everybody out there. I'm at the transmission shop rebuilding transmissions, but I'm trading at the same time. But when he mentioned about holding long term, that's not what we got in originally to do. We got in for a short squeeze, but what happened is these people flipped the board over. In other words, they changed the rules. Going back to Robinhood, you had Chris Como, you had Andrew Sorkin, who always seemed like he's hurting every time he talk about AMC. But what happened is Robinhood essentially became a short seller by default, because according to the rule, if a stock goes up too high and they lend out, and you can see, they tell you they lend out stock. Um, the stock had gone up too high, and if the people who borrow from them cannot return it, then Robinhood essentially has to go out into the market and buy those shares at a high price. So, in other words, what they did, they tanked the stock. They got margin called. No one seemed to focus on that fact. Chris Como would say, "Why did you do it?" There was others saying, "Why did you do it?" Well, they simply got margin called, and they had to pay $3 billion. They end up tanking the stock to bring their requirements down in line with their margin, which is why they stopped the buying. They brought the buying pressure down and allowed people just sell to sell and sell. Nobody really focused on the fact that Robinhood got margin called. Um, and they couldn't they couldn't go in the market and buy the shares, and they got away with it. So by getting margin called, they save themselves but at the same time, causing their customers and a lot of people a lot of money by doing this. And when they did this, they didn't only save themselves; they saved a lot of other companies, which why they allowed them to do it. The SIPC would have had to come in and guaranteed everybody, but they saved them also, which is why the DTCC didn't do anything also. So now, in looking at that situation, what the other companies start doing, because they wasn't using it like they are now, is start saying, okay, Robinhood did it by cutting the buying pressure out, and allowing the stock to tank. Then let's do it by using the dark pool and off exchanges, which is what Gary Gensler had said openly. He said it openly that a lot of the retail trades are being diverted to the off exchanges and not going to the lit markets, so the buying pressure can go high. So if they are allowed to continue to route the pressure to the dark pool or to the off exchanges, then it makes no difference how much you buy. We've had volumes of 100 million and the stock wouldn't go up. And here you see a stock, I think it was a HDK, shoot up to 2,000. But here we got 100 million trading. And it's like if you got a pipe and somebody put a hole in it and allows some of the pressure to go out, then they're able to control that. Until that is stopped, then that hole is plugged. The buying pressure still won't go up. Makes no difference how many shares you buy.
Here's the fix to that, because they're not going to shut down dark pools. I think we've seen that. When you sell new shares, legally issued new shares into the market, like they're doing with the APE dividend, even with that buying pressure, if it goes to the dark pool, you might not get the full buying pressure, but you are fixing failure to delivers and naked shorts, giving them the opportunity to flip their positions into a legal one, which erases that stealth, like that just selling pressure. You know what I mean?
Yeah, it'll eliminate the need for them to keep routing to the dark pool if they don't have all of these illegal positions active. And just going back to, I think, transmission guy, what he said about, holding long term. I mean, yeah, when I first got in this play, like in January, I had actually been playing puts on AMC in December. I had playing the opposite way the month before all this happened. And, I saw what was going down. I saw how to make a quick buck, and I thought I could get in and do it. And, there's a funny meme out there that is like, cheers to all the people that came for the free money but stayed for the revolution. And it's like, I'm not. I guess in the short term, I'm upset, right? Like I'm upset that all this is happening. I'm frustrated that it's allowed to go on day in and day out with no intervention. But we got them cornered, and there's only one reason why they want to crush us down every single day and make us feel every day like we made the wrong decisions, is because we've been right from the start. Apes have always look at all these conspiracy theorists that have come out true about whatever government and everything that's happened over the past couple of years. Look how much stuff has turned out to be true, and it's just a matter of time before the narrative will flip, and all the media outlets are trying to save their asses from lawsuits and defamation and whatever it may be, because for all the apes that have stuck around this long, I truly believe it'll pay off in one way or for another, even for the small shareholders. So it's it was a short squeeze, and I really wish this would have been done last year, but I really want to get on board with this whole idea with Spence has been talking about for a couple months now, about real dilution, about the company selling real shares into the market, helping fix the supply and demand curve for the actual stock.
Well, I understand.
Lucas, about that, if you would have told me in the beginning that the fix to synthetic fake dilution would be real dilution, my brain probably would have exploded. But
everybody's did, man. We all went through that minute when, like I said, if Lou would have came out and said, I'm not telling you to stop buying. But when he said, and I don't even like Lou, but when he said, you fuckers are diluting your own stock by buying synthetic shares, he was right. The more shares we bought from market makers that didn't own them, the more stealth dilution we contributed to our stock price.
Yeah, absolutely.
But he's just such a douche that he comes out and says everything. He wanted people to completely stop buying, which wasn't a good idea.
Well, let me tell you something, Spence. Lou used a lot of people's DD. Wall Street, and I'll send it to you. I had said this about it was a year ago, and I had sent it to him, and I mentioned something about stop buying. And I not only did I do that to him, I talked to or sent an email to Mr. West Christian, and he emailed me back also. When at one time we were buying and buying and buying until retail eventually owned the float. That was good. You want to buy. But we are having so much naked shorting that was going on. If we own the float, I asked Mr. Christian, I said, what would happen if retail would just stop buying completely? And he said he didn't know. That was the email he sent back, because it was like going into a new area. Now, the reason I had mentioned that, because I don't even believe you could get everybody to do it, because there would be people trying to buy anyway, because they would try to get it at a cheap price. But I wanted to find out what would happen if you own the float and then they push the stock all the way down to zero. What would happen then? Let's say retail owned it, nobody sold, but yet the stock, they pushed it all the way down to under $1. What would come of that? What would you think?
There would be an obvious fraud there, because if retail owns the float, except for what short sellers have short sold, then the supply and demand would prove that there's synthetic shares out in the market. I think a guy did this a long time ago. I forgot what company it was, but this guy bought the entire float of this company a long time ago. And
that was Patrick Byrne and Overstock. Byrne Overstock.
That's right. So I know that if that could happen, that would put a stop. The buying was okay, but there's a certain time where once you get yourself in a position where you can stop yourself. Now, what happened is Robinhood and the others were stopping us from buying. But now, after you own the float, now you stop yourself. Now you're in a different position, almost kind of like what Russia has done with Ukraine. They were stopping, sanctioning Russia. But then Russia sanctioned itself and turned off the gas. And now it turned in a different situation. But he waited until he got a position to what he could do that. So if we own the float, and then if you can get everybody, okay, now is the time to stop buying now. It's, you got to stop buying. No, you just got to know. You already got 90%.
Hold on. Because the only problem I can see with not buying, right, is that you constantly get those days that we've seen, I would say from January of this year until that little 34 spike, I believe it was in March. The problem is, if there's no buying pressure from retail whatsoever, yes, I know Gary Gensler said most of our orders go to the lit exchange. Our buy orders are, it's sad to say, but they're essentially helping to clear up the FTDs in the long run. So if you don't have any buying pressure day to day, even small buying pressure from retail whatsoever, you're going to get the day to day nickel and diming, high frequency trading, penny down, short ladder attacks that we've seen. And we've seen AMC volume have days of under 10 million. And I mean, I have in the past year. And you wonder how can volume be less than 10 million on a stock where it's literally was one of the most Googled companies in the world.
Here's the beauty of APE, right? Mm-hmm. It fixes all of these problems. We know now that if we continue to buy, we know that we are in fact diluting our own price because they're selling us shares that don't exist. Whatever, who cares? It's digging market makers and brokers a deeper hole. But the beauty of it is Adam Aaron has 5 billion shares of APE. He can continue this APE share offering when these new legally issued shares are purchased and get put out into the open market, and reduce that stealth dilution I'm talking about on our price. We see the price run, then retail makes money. Then Adam Aaron takes the cash he made and goes and pays off AMC debt. Then say, hey, why don't we convert APE back to AMC? Because AMC will have run too. Say AMC runs 30, 40, 50 bucks. Retail can start cashing out, and then the price will come down, and then Adam Aaron can convert APE to AMC and then start buying shares back at a discount. And then months later, go, hey, you know what? Retail apes are buying again. We're getting back into that same situation where they're diluting their own stock through buying pressure because of shares being sold that don't exist. Let's issue more ape out into the market. He can continue to do this over and over and over again if the market makers keep selling shares that don't exist. The beauty of it is if market makers stop selling shares that don't exist, we squeeze. This is what's going on with Tesla, in my opinion. I think we are headed for a Tesla-style squeeze. And more importantly, if these market makers and naked short sellers decide to stop selling shares that they don't own, then we do a big squeeze. So there's a lot coming with this ape offering, and it is a true checkmate. It's just taken a little bit longer than anybody thought, but I do believe in the next 2 weeks we're going to see something come up. I think it's why they dropped the prospectus in the 8K to calm us down and educate us on what's really going on. I mean, they very clearly talk about sales of over allotments of shares in the 8K, so they know there's more apes. There's an ape born every day. There's literally an ape born every day. And whether they're buying 1 shares, 100 shares, or 5,000 shares, there's more apes coming in to buy than I think are selling and leaving, especially with people who bought like at 70, 60, 50. You know, they're smart by now. They know they're not going to sell those shares. They're going to buy more and average down. So I think something really big is coming. I think Adam Aaron has a chance to turn this into a Tesla-style squeeze. If the market makers and institutions decide that's not what they want is another one of these things, then they'll stop selling shares and we'll have brokers start telling people, hey, there's no shares available, and the demand will go through the roof and it'll squeeze. So I just think there's nothing else on my mind except for this right now.
I understand the buying that would, what do you say, ladder attacking going down.
Yeah, when the market makers own shares of their own and they can trade them back and forth to each other one at a time to make it look like there's a lot of selling pressure. That's what they do on low volume days.
Yeah, no fractions.
I like what Spence said about Adam Aaron kind of having this in his hands now, where he has this allotment of ape shares, and he could effectively be the one to, or well, not he, but the company could be the one to effectively help eliminate the FTDs by issuing shares, right? And then retail wouldn't even have to supply a lot of that buying pressure because he's entering into agreements with these firms to sell shares who we are speculating might be naked shorting, right? So if these firms that he's allotted to sell ape shares, for example, Citibank, if Citibank turns around and says, okay, we're gonna sell these shares to JP Morgan, at a predetermined price, or Citadel, or whoever it is, on or off the books, that is helping to clear out the FTD pipe. So if Adam Aaron can do this effectively and on a strategical timeline, I think Spence is totally right that he could, the company could help eliminate the FTDs without retail even having to risk their own liquidity. You know.
Well, I know that when Mr. West Christian mentioned that he didn't know what would happen. He did say, I was asking him how come the price was going down and it was showing the way it was, and he said because the price is not real. This is what he said. He said the price is not real. So I do know there are a lot of apes out there, retail investors. They weren't when you have someone who have um, almost like unlimited liquidity fighting against those of retail who are out there working and trying to put money in for a living. They can try to wear people out, and there's a lot of people that were getting frustrated simply because they didn't have the money to keep buying and keep buying and keep buying. You have to look at that. Then you got to go around and say, okay, how in the world are they constantly selling this stock? We own it. Well, again, if you stop, then even if they're trading among themselves, that wouldn't be affecting retail at all. They'll be trading among themselves. And if they pushed it down to $1, as Spence mentioned, that would show the type of fraud that is going on because, hey, retail is not selling. In fact, it's been shown that even in the news, they're saying retail is not selling. Retail is not selling, you know.
I think the only way to do that properly is having share intel in an AMC to identify the flow of shares, or B, everyone DRS their shares, which is probably not going to happen either or. I talked to Wes too, and he said the only thing he's concerned with is why the AMC board will not even contact him back. More than likely, it's because of the situation that's at hand. They know there's naked short selling. The board does not want to get wrapped up in any litigation. And with this, if you had the opportunity to turn AMC into a Tesla style squeeze, what would you rather have? One quick, fast, short squeeze or one long, short squeeze where you can generate capital for years?
Well, if it can, I don't know. I think it depends on how much money that people can how long they can endure, because there's some of us who can endure a little longer than others. We have to constantly try to encourage people, and let them know, hey, we know the fraud is out there. We know Gary Gensler is a clown. We know he's not doing anything like he's supposed to. He even said that retail have figured out that the stock is not in or the stock market is not in our favor. He's saying a lot of things that we can hold on to, and that we know is true. But at the same time, they're not doing anything about it. Okay, but they know. I mean, we see it. We see it. But when it comes to this game, they will flip that board over, and change the rules. They already showed that. They showed that by allowing Robinhood to do it, and then allowing him come out 6 months later and do an IPO. They didn't do anything. And then when they did that sham GME report, they mentioned that it wasn't even a short squeeze that caused the stock to go up that high. And the SEC agreed with it, even though they found out later, people coming out saying, oh, the SEC was wrong about that. Still, they haven't owned up to it. So there's a lot of fraud, and there's a lot of powerful people there that, if you're trying to get money from them, you're trying to take their money, and they don't want that.
And I want to attest to, like you said, about people being able to hold out or survive until this squeezes. I just think that's like, we have to remember that, like, if you want to be successful in investing, you can't invest more than you're willing to lose or that you can afford to lose. Because unfortunately, I've seen a lot of friends that tried to pile everything into these other stupid plays, like, YOLOing their whole portfolio on BBBY at $24. I mean, I know people that have done this stuff. And if you want to take your emotion out of the game real quick, is don't invest any money that you can't afford to lose all. You know, you don't expect to lose all of it, but you can't go into it, you know, and have to, after having like 7-8 years now of investing, you can't have the mentality of I'm going to see this money again. If you want that, I suggest you get a money manager to do it for you, because then you won't see it. But if you're emotionally so invested to where you feel like you're riding on this, this is ride or die, you're banking on it. This last year has probably been very, very hard for you, and I know a lot of people that it's been very, very hard on, and it sucks, and it's the part of the game that we play here. But you know, I thought, hey, last year before the June run up, I was about to YOLO in $10,000 on AMC, and I stopped myself and had to remind myself that I can't afford to lose $10,000. And if I would have, it would have been very bad, because at this point I would have lost my entire net worth if I would have put all of my portfolio in AMC. So I think it's important that, as tantalizing and as, you know, eager you may be to get those gains that you see maybe through memes or Wall Street bets or whatever it be, those gains are attainable. But I just think, you know, ride or die on one or two stocks is just a bad way to be. It's hard to live like that. You know, when I first got in the game, I bought Tesla originally at like $50-$60 a share when I first saw it, and I sold at maybe 250 before any splits happened. And you know, I had $250 to my name. Yeah, that was it. I had one share of Tesla and I sold it, right? And all this stuff. So I've put all my money into one stock before. I've taken gains and I've rolled it all into one stock, and it hasn't worked. It's failed, and it leaves you hurting. Like you can't have a ride or die. And I love the fact that there's so many people on board with this community and what's been going on here. But just for your own mentality and headspace, I think it's hard to be ride or die here.
You got to live within your means, and that's when you see people blow up their portfolios because they YOLO'd in at $12 or $15 or whatever. You can't YOLO in and then expect to hold until $100,000. That is absolutely insane. It will not happen. If you're going to YOLO in, you have to be prepared to take 50% profit at any gain. Say you put 10 grand in on AMC and it runs from 10 bucks to 20, you better be taking your cost basis out. You have to take profit on that if you're YOLOing in, because if you do, you run the risk of holding this down to nothing and your money's gone. And then what normally happens is people YOLO in, they lose half of their money, they panic sell, and then the stock runs. And I'm telling you, if it seems like the market is just waiting for you to sell to let the price run, it's because they are, because you and another 25, 30,000, 100,000 people are all experiencing the same FUD, the same time frame, and the same pressure. And they trigger people to sell at certain times. And then as soon as they get enough selling pressure from retail, the price runs, because the naked short sellers come in and buy your stocks at a discount and cover their positions. It's like
I wanted to that you just brought up, like you brought up the algorithm in my head, and my uncle actually called me last week. Him and I work on boats together. He's an expedition leader, so he has a lot of guest interaction on the boats, and it's part of a Nat Geo line of cruises. So he called me. He goes, "Hey, you'll never guess who I got on the boat for 2 weeks." It's I forget his name. I can look it in the text, but it's basically the guy who designed BlackRock's algorithm for trading. And he's like the number 4 person down on the list when you go to BlackRock's website for corporate officers and stuff. So he asked me, "Hey, do you want to ask this guy a couple questions? You know, I can ask him for you." And he was on the boat for 2 weeks, and he had a good chance to get a good conversation going with this guy. And the biggest things that I walked away with after my questions were their analysis and algorithms are no longer built on fundamentals or TA or chart trading or any of that.
Yep.
You know, we are the algorithm now. He told my uncle straight up, the algorithms are built on sentiment. So that was straight up concrete. Fucking guy from BlackRock. I can send it in the text to Spence. The guy from BlackRock literally says the algorithms are built on sentiment. It doesn't matter what we do. They are watching what we do. They are watching our stock picks, they're watching our trades, our brokerages are reporting it to the big guys, and the big guys are making money off of it.
Yeah.
So
Well, they have payment for order flow, and then they have purchases. They buy data from Twitter, which feed all directly into their algorithms. Which there was a study I think that Oxford did back in 2012 or maybe 16, something like that. They did a study that showed when Facebook had on days when Facebook had more positive sentiment, people were happier overall. The stock market did well. When something bad would happen and people on Facebook were not happy, the stock market would do bad. They're all this entire system of the stock market with retail in on it now is nothing but like a big emotional cluster matrix. They're trying to see how many people in the market at certain points in time are ready to sell or buy based on their emotional mindset.
Yeah,
That's why
sometimes I think that I'm trading against the broker itself. If I if I do an option trade, it looked like it moves the stock away from me.
that's
designed on purpose. You know, that's literally what it is. You can look this guy up just so for validation. His name was Bradley Betts. But you know, you have an algorithmic coder from BlackRock saying they make. I'm reading through my text messages now. He said they make the most money through stock loaning, and they get all of their data on retail from brokerages. So it's, you know, he wouldn't name any sources. He goes, less built on TA/fundamentals and mostly on sentiment. He didn't say who they got their info from, as he couldn't put a name on it. He asked if it was sourced primarily through brokerages, and he said absolutely 100%.
Here's the funny thing about what you said there. This is when you decide, when you buy or sell, say you're an amateur trader and you're sitting at your computer and you see some news on Reddit and you get all excited and you decide to buy the stock, right? Chances are there's probably 10,000 to 20,000 other people doing the exact same thing you are. The algorithm picks up on that sentiment and says, hey, these guys are all getting ready to pump this stock. We're going to short the piss out of it after we have a little price action. Mm-hmm. And that's when the people who are chasing get crushed. It's absolutely disgusting that they are able to use algorithms to base their brokerage or their fund based on the emotional downfall of human beings. It's disgusting. It should be illegal. Payment for order flow should be illegal. The U.S. stock market should be a completely level playing field across the board. But in that, and this is where I always go, oh, wow. If everything was fair and even and level, people would have very stable investments, very stable incomes, but you would never see anybody making like life-changing gains. Criminality in the stock market leads directly into volatility, which allows for these big runs or these big crashes. I don't think people would be in the stock market for the most part if you didn't see gains that were worth leaving your money in for, because then you might as well just have your money in a bank account, which if the stock market was more stable, banks could offer 3 to 5% interest rates on your savings. So it's
just a little tip. This is a transmission guy. I mean, I've been trading options now for 4 years. I've been investing total 7-8 years, and I really don't even claim to know everything because I'm just a dumb crayon eater like the rest of us. But basically, if you feel like you want to make money short term on options, you have to follow where the money's going, where the big money's going. You can't. In my experience, when you play options with an idea in your mind of, oh, this seems like it's the right thing to do, or this is the right play, if you're fully confident about an option play in your head, you're probably going to lose money. And you stop losses on option plays are your biggest friend. You keep them tight. Don't let yourself lose out on all the premium you spent. If you're not going to be selling to open on a margin account, and if you're just playing with cash, it's really important to keep your cash protected. Don't buy an option and let it run down 30% and then sell when it's 30% down. You have to have a trading plan in mind for what you want. If you want to make money on the day, just in a single day, just make a small day trade. You can't be looking for those plus 100%, those 200, 300% gainers, because they do come and they will come, you know. But even myself, who does this full time for work now, I only get those once or twice a month if I'm really, really lucky. But short-term money on options is made compounding the small gains and following where the big money is putting their bets. It's a hard game, and it is stressful and mentally taxing, but it's possible. I hate when people lose money on options, because you could really be stealing market maker premium if you do it the right way. It is hard, but there's a lot of tools out there for you, man. So if you have that dream of not working until you retire, like I did, and I'm only around 25 years old, but I don't want to kill my body to make a living, right? So in January, I quit my job. I had a nice job driving boats, but it was mentally and physically taxing. In January, I finally quit my job and became a full-time trader. And it is possible, you know, I've survived and I've been able to save money, put money aside. It is possible for anybody out there that is looking to do it. You just got to keep yourself tight.
Well, thank you for that, Mr. Lucas. I started trading options in 2000, and I used to teach. I used to teach people. I would have like maybe 200 people in a class, teaching them how to trade calls and puts. And I stayed away from the sophisticated stuff. And even though I rebuild transmissions, I have my computer right here while I'm always checking them, and trading. And what you said is what you said. I have to concur is what I do. I may space my trades up to 10 or 15 trades, but and trade the little gains, like you said, and eventually one day I may hit a higher one and cut the losses short. I do that. And I enjoy options, and I look for the most volatile stock like Tesla.
You and me both. No, that's really reassuring. It's reassuring to hear you say that. To hearing from somebody who's traded options a lot longer than I have. No, that's reassuring. So cool. Thank you.
And every time I win, I get a lot of money. I go buy me a couple of shares of AMC. So I have a lot of fun. But Spence, I would like to say I follow you. I like what you're saying, and I think you're doing a good job. Some of the YouTubers that's out there, they don't even like to answer some of the hard questions. Some of them have gotten to the point where they've gotten so big, they even have people speaking for them. You try to talk to them, they got like a gatekeeper or somebody where you can't even talk to them right away,
Thanks, man. I appreciate that. I don't try to put anything out. Sometimes I say whatever I want. I'm not here for likes and views, and I give any YouTube money I make, I give it away in gift cards to the community in AMC. But the important thing is getting to the root, there. What's really going on? Adam Aaron would not come out. There's two things that could happen. Adam Aaron is here to make the company survive, and he does care about this, or Adam Aaron doesn't care about us and is trying to destroy the company. The idea that Adam Aaron's trying to destroy the company there's no way. It's the stupidity of it's insane. But the root and the there of what's going on right now is we know there's naked shorts. We know there's failure to delivers. We know now that causes stealth dilution in the stock price. And I mean stealth dilution is when you sell a share into the market that doesn't exist, you're creating dilution on the price, but it will not show up in the shares outstanding because the company hasn't legally issued more. The way you erase that stealth dilution or reduce it is by selling new shares into the market with fresh buying pressure, and in that, giving these naked short sellers or these market makers who are creating FTDs an opportunity to buy legitimate shares straight from the company to fulfill their positions. Now, the problem is if these market makers and naked shorts continue to do this for the end of time, then they're just digging a deeper and deeper hole. The benefit of it is Adam Aaron can keep doing stock offerings, making the price run and raising cash until AMC is an unshortable stock because it's completely cash flow positive. It's basically what kind of has been happening with Tesla.
Hey, Spence.
What's up, Al? How you doing?
Pretty good. How you doing?
Bad.
So one of the things that we talked about on one of our calls was the amount of shares of APE shares that he was selling. Right, it was 400 million something. It wasn't the full float. It wasn't the entire float. I'm asking myself, well, why did he do that? Why did he pick that number explicitly? There has to be a reason, because you sell that at what, $3? It's only $1.2 billion for Q3, right? So the more I started rationalizing, the more I started thinking about it, there has to be some kind of convergence that's going to happen. You figure, APE, that APE sales, right, that we just conducted, that's going to be our Q3 savior, because the movies, we all know Q3 sucks in the movie industry. The kids are back at school, the college kids are at university and whatnot, and it's just not a great time for the movie industry. So I started thinking, well, he's got to have a nice chunk of money positive for Q3. He's got to show it, because he's been doing consistently well, especially with Top Gun and everything else. And I'm saying to myself, okay, we get that, right? He wants to have a good showing for Q3. He's got $2 billion or whatever it is, right? Great. Now what? What happens in Q4? Well, we have all those great movies coming out in Q4, which I know for a fact we're gonna easily reach $1 to $2 billion on the movie end alone. Okay. If you go through the lineup, you can Google it. The Q4 releases are absolutely knockout. There's so many great ones, and then Q1 in 2023 is even better. This new Mission Impossible film, and so on and so forth. But it's still I never reconciled why it was only $1.5 billion. I still fervently believe there is something happening with our debt that we're just not privy to. Remember when you guys did the call when he did the call with us, and he talked about finance. He set aside $100 million this time for acquisitions, right? So I was PTing, and I was saying to myself, what do you do with $100 million if you're a AMC, if you're a company in debt and stuff, and you wanted to buy something? What would it be? Well, we've got the gold factor, and we got a fucking grand slam for that. Wonderful. Then I started asking myself, well, what keeps companies like Adam Aron's in business? Well, it's the studios, right? The problem is he can't buy a studio. There's not $100 million studio out there. So what do? What's the next best thing you can do to create full-length movies and so on and so forth? Easy. Animation startups. You buy one of those companies. They're small. You can house them in Kansas. You can house them wherever. And you can have your own line of animation films, your own characters, and own development. Remember, Adam Aarons is a creative chap. He's not going the traditional route, right? He hasn't done that. We haven't seen him do that once yet, the traditional route. So you're going to see some unorthodox acquisition or a merger of some kind that nobody has seen coming. Now, the Pixar thing, I know he sent out a tweet about tweets and the cryptic nature of them all, Spence, and I'm not trying to discount that. I just feel like that is such a deliberate thing, or is a hint, or something is big that is brewing, and it's going to be converging very soon. And this APE capital raise that we're doing, it's just part and parcel. It's part of the course. It's part of the course, if you will. And I don't think you have anything to worry about. A lot of people still believe dilution is bad, and it's not, man. No matter how many times you tell that to them, people just don't know any better. Finally, I wanted to just let you guys know. So the attorney and I have been working together for probably close to 2 weeks now. We did the background. We've consolidated one metric fuck ton of evidence, tons of video, tons of GIFs, photographs, comments made by both Gary Gensler and Ken Griffin. We have all those things. We've dissected them. We've cataloged them. It was a painful process, but it's very, very organized in a way that when we write a complaint up in federal court, it's going to just be smooth transition after transition, and they will be able to see a pattern of misconduct, exactly what we discussed on the call 2 weeks earlier, Spencer. So that's kind of what I've been up to, and I'm just letting you guys know about this because I know everyone's got a vested interest in this thing, and there are others filing the same or similar lawsuits like myself. They're in federal court. We know it sounds futile, right? But the law is a big thing. It's a wide-ranging thing, and a lawsuit isn't always a lawsuit. We're not looking for money. We're looking for action. We're looking for courses of action, options, if you will, right? And we're going through a non-traditional route again to force somebody to do something. And I think what makes our approach different, and one other gentleman I know he's on the call, I can see him. One other different is forcing the government. It's easier to get government to do something than a private company, because a private company is going to have greater resources and more autonomy and sovereignty, of course. But government, not so much, especially when they're not following the rules and so on and so forth. So that's all I have for you guys. Thanks again so much, Spencer.
Yeah, good luck, man. I think the pattern of conduct on these market makers and brokers is there. Definitely, you'll find it. And as we can see, more and more investigations, and I hate to say it because I think the SEC is a complete waste, but there are more serious SEC and DOJ investigations and actions being taken this past couple weeks. We just saw Microsoft, Google, and JP Morgan being investigated for short selling fraud. Now we have multiple, like Bank of America and multiple other people being fined 1.1 billion for not keeping communications. So they are zeroing in. And to me, it feels like the regulators are starting to zero in. I think the banks, the market makers, the brokers have all gotten away with so much for so long and have created such a massive bubble in the market that they are literally just trying to pressure the SEC to do nothing so that this doesn't all blow up. Because what's about to happen with AMC and APE is definitely going to cause it's going to cause some crosswinds. I'm pretty excited. I cannot wait. This is what I'm waiting for. I'm waiting for Adam Aaron to come out and tweet. We have already through Citigroup finalized contracts for every one of the 425 million shares to be sold at these prices. I think the market is going to contact Citigroup and buy every single fucking share of APE before the first week of the sales are over, in contract with bona fide offers. And in that, maybe possibly telling us that these institutions have requested more than the 425 million through the process of the over allotment sales that in writing says they can only do one time. So if you're an institution with 100 million naked shorts or 100 million synthetic shares you've sold or FTD swaps or whatever you want to call it, you have one opportunity to come in and buy all these shares at once and close your positions, and that's it. You cannot come back later and try to buy more shares past the 425 million unless you use that one-time over allotment deal that they put in the writing. So pretty excited about it. I hope he drops them on the 30th. I'm going to get ready to kick off the call here. I got to go eat something. I'm getting a headache. But I hope we're going to kick off September 30th with some really good news from Adam Aaron, being it's his birthday. It's also the same time the Vatican has recalled all its assets back to their bank. It's also October 1st, the beginning of the new fiscal year, which is really big in the finance and government sectors. And like Al said, Q4 is going to be freaking huge. We got Avatar 2 coming out, and then Q1 into 2023, you got the new Marvel phase, the new John Wick movie, the new Mission Impossible, and a bunch of other new feature films coming out, like all the way out to 2024. They just announced Deadpool 3 in 2024. So, but hope all this made sense. If you missed the beginning of the call, I highly recommend you rewind back and listen to the theory and the thesis on the stealth dilution through sales of synthetic shares and naked shorting and failure to delivers. And hope everybody's staying strong, man. And prayers to everybody in Florida. Hope everybody in Florida is staying safe.
Thanks, Spence.
All right.
Hey guys, see you later.
All right. That was the space call. The key takeaway from that is that the synthetics that are being created out in the market by naked shorting and or failure to delivers, the problem is people are selling shares of stock that they don't own and don't exist. AMC is not authorizing these market makers to sell more stock than they've issued. And when they do it, it dilutes our price action, but doesn't show in the float. So I call it stealth dilution. Basically, they create more shares than are supposed to be out in the market that don't show up in the shares outstanding, but show up in the price discovery. Therefore, when Adam Aaron is going to issue more AMC, or when he did, the price went up. Because if you issue real shares out into the market that need to be purchased to facilitate the buying pressure that was not there when they created the synthetic share, you have price discovery. That is why they're doing it with APE. The problem was, with AMC, we were all sitting at 60 bucks. We thought we were going to squeeze. Everybody said, no more dilution. We don't want to dilute the stock price, which was an actual FUD coming out from people that are bad people in this community. They are masterminded us to think that dilution was bad, when in reality, we are actually undiluting the price discovery. We're diluting the float, which is going to cause price discovery, because we are limiting those synthetic shares that are out in the market. That's what's going on with APE. If you were short one AMC when APE launched, you're also short one APE. Like if you were short AMC, you are now short APE after the dividend date, which means there's tons of APE shares out there that shouldn't exist. There's a bunch of synthetics. And then they failed to deliver on 45 million APE shares on the first day of trading due to the fact that they didn't have any to give anyone, so they created more problems with the failure to delivers. You don't erase 40 million failed to delivers without significant price action unless those shares are fake. So Adam Aaron is going to sell 425 million shares out in the open market through brokered deals by Citigroup. They are going to be at a premium. They are going to be bona fide offers. And I have a feeling what's coming up is you're going to see that the market is going to come and buy more than 425 million APE shares from Citigroup through the sub clause in the 8K that I've read to you guys and talked about. This clause is that they have a one-time option to buy over allotments of shares. So if they're short hundreds of millions of shares, they have one time to purchase any over allotments, which is the naked shorts they own, from Citigroup in writing. That's going to give us a share count, a reconciled share count, and it's going to be massive price action. Just on a bottom line basis, fundamental stock play, APE should be trading on par with AMC. Same price action. It's a 1-to-1. Common stock, preferred stock should be trading the same price. That is why I'm buying APE, because I know for sure that APE is going to gain in price at least 30 to 40% to make up the gap with AMC. So either AMC is going to come down or we're going to go up. I think APE's going to go up. AMC is going to go up. We're going to regulate, finally find our price action. Then we're going to have some type of APE squeeze off of the sale of these new shares. And then once they make the cash that goes to AMC to pay off debt, AMC squeezes. The naked shorts are stuck. The FTDs are stuck. Anybody creating and selling shares they don't own are stuck in this play. That's where I'm going to leave it tonight, guys. I really appreciate you coming. Please like and subscribe. Kick this message out. This is not financial advice. It is theory talk. It is technical talk. I'm not telling you what to buy or sell. I'm only telling you what I am doing. This is my plan. This is my thesis. This is what I'm doing. I wish you all the absolute best of luck. I'll start trying to get more consistent videos out with important information, but I am not going to just make videos for the sake of making videos. That's not what it's about. There's too many YouTubers out there making videos saying the world's ending and misguiding people. This is community talk. This is a community space. Everybody's welcome. You guys have a great night. We got a couple more trading days. Hope everybody does well. Prayers to the apes and everybody in Florida. I hope you stay safe through Hurricane Ian, and hopefully it'll be over soon and we can all get back to this little bull rally that we had here in the market. So